Hi, thank you for joining me. Today is January 8th, 2019, and it is currently 6:30 p.m. Eastern Standard Time, and it's Tuesday. So it's been a fantastic day. But the reason you're here is to talk about the trade we've been working on. So we're going to do our screen share. And there's some things I need to talk to you about and show you what's going on. And the trade is New Zealand dollar, USD dollar. Or I'm sorry, NZD, United States dollar. I said it backwards. So we fixed it. Now this is what I'm talking about. If you take a look at this, this is a buy. And it's been going for quite some time. But it's been going since June 25th of 2018. So like I said, it's been going for some time. And when I started this trade, my balance was $280. Take a look at where it's sitting now. But while you're looking down there, also take a look at my margin level. My margin level is 7,599.42%. That means it doesn't matter what this trade does. I have so much in my balance that I have no concern and no worry about losing the $70 of where it's sitting. The entry price for this is 0.69586. My stop loss is at 0.62586, which is quite literally 7,000 pips, and I'll show you how. And there it is. So it's only $70. When you have over $1,500 in your balance, $70 is really not that big of a deal. It really truly isn't. So my take profit is at 0.76586, and it's also 7,000 pips or $70. The reason I have my stop loss and my take profit 1-to-1 ratio is it's 1-to-1 risk to profit ratio. They're the same. It keeps a re-entry or a head and shoulders or a test and retest, a drawback or anything like that from hurting and pulling more than what most of us wants to lose, right? So it's not going to hurt me. And keeping a stop loss in there, only losing no more than $70, 7,000 pips, I'm not doing too bad. And I don't have to be concerned. So I can put my stop loss in, put my entry price in, put my take profit in, and walk away. I can have a life. I don't have to sit in front of my computer or even stare at my smartphone to see how this trade's going. I'm what is considered a long-term trader. And that's why I'm here to show you how you can be a long-time trader and have a life and not have to worry. But you can also be a short-time trader. On a marked up chart, you have the trend lines, you have your standards or qualifications to get into a trade, know where it is, and it can take as little as 15 minutes to up to maybe 4 hours tops before you're out. And you can still have your life. You can still enjoy the freedom, the financial freedom that you would gain. My chart is actually called a naked chart because there are no indicators on here. There's no trend lines. It's not marked up because of my health issues. When I sleep at night, I go through grand mal seizures that clean my memory, meaning I have nothing left. no memory whatsoever when I wake up. So having to learn every day-to-day thing that most people don't even think about, they just do, as well as who I am, where I am, and what I need to do, as well as business and marking up the chart, it can become overwhelming and then a bit much for me to do on a daily basis. So I've chosen to stay in the daytime chart that shows me the trend this specific trade has been doing. And to show you that, this is what I want to show you. When you put your cursor where your trade currently is. When you trade right, but you always look left because a trade repeats itself. It has a trend that will always repeat itself. And as you can see, the price is sitting at 0.67261, which is right there. It's actually turned around. It's heading back up. And I'll show you why I say that. You take your cursor and you go left to the last time it was doing this. It had the pattern, the trend that it was doing, and it is currently right here. And if you can see what I see, being that this this pattern has been going on since April of 2014, I can tell you that it will take about a week, but it's going to switch and it's going to go straight up into the profit over the entry price. It's going to go up into profit, then it's going to come back down and retest the entry price and go back up, and it's going to do that 3 times, and then it's going to go into profit. Now, if you don't catch it right here, most people do, but if you don't, it's up to you what you want to do. You can get out and restart another trade or stay in, but I wouldn't advise it unless you've had experience and been trading for a while. And when it gets up here, there's no point in waiting for it to drop again, because that's a good $60 right there. There's nothing wrong with that. And you pay yourself in trades. When you become a trader, when you trade with Forex, you actually pay yourself. So you pay yourself a percentage every payday. And your payday can be what you decide as long as you have the means in there. Now, a broker will charge you a fee every 24 hours. But it's not so much you have to worry about. I've done a minimum of 4 pennies to a maximum of 25 cents, and I can handle that. That's the only thing a broker will charge you. Now, people have asked me why I don't put in more than 1 entry price. Well, the entry price, a second one with this broker, it's a first in, first out rule, meaning that the first entry price you put in has to come out before any additional entry prices can be removed, regardless if it's profit or negative. And the more entry prices you have, the more your margin level will fall. I like to keep my margin level pretty high, and having it over 7,000 is pretty decent. Most brokers or most traders will tell you, hey, you can go down to 500% without a worry. That's true to a point, because the broker will shut your account down once it gets around 100%. And I wouldn't want to risk it, because it can go fast, where your whole account's gone, just like that. So keep in mind where your margin level is. My minimal that I like to have is 2,500, making sure there's no possible way of the broker being able to shut down my account. And keeping it over 7,000 is a guarantee. Now, trading, there is no guarantee that past profits will guarantee future profits. There's no guarantee whatsoever. So you trade at your own risk. And that is another reason why I stay in the day time chart. And let me show you why. Go down in the minute time chart. What can you see here? Do you know what's going on? I wouldn't be able to tell you. Going into the 5-minute time chart, there's a little bit of movement, but still not enough clear picture or information to actually make an educated decision. Notice what I said. I would want people to have educated decisions, not whimsical guesses when it comes to trading or anything else that can actually affect your future. Going into the 15-minute time chart, there's more information. It's got my attention. However, not enough information and definitely not a clear picture of the trend on this trade. 30-minute time chart, yeah, there's more. Keep in mind that if you've got the experience, you've got the knowledge, and you've been trading for a while, by all means, if this is your comfort zone, go for it. Have fun. Be careful that you don't risk your account. So keep your money management in control. Going into the hour time chart, yeah, I can see it. I can see what's needed and what can be done. However, with a naked chart, I still wouldn't advise it. Going into the 4-hour time chart, yeah, you can see quite a bit here, but it's barely a year. So I wouldn't advise it here either, especially without having it marked up, without having the indicators on it. I wouldn't advise it. It's extremely risky to trade on a naked chart, on a smaller time chart, without the experience and knowledge and the know-how. You're just asking to have your account shut down. So that's why I stay in the daytime chart. Now, at this time of day, normally I understand all about the trade, marking up the chart, the head and shoulders, the test and retest, the support and the demand, the inverted head and shoulders. See, I understand that. But earlier, if I were trying to look at this, I wouldn't have a clue. So I would be remarking up my charts every day. And that can be extremely overwhelming. If you're comfortable with it, great. Not a problem. Now, I've been asked how I get my signals. And there's 5 areas that I get my signals from. I go to Stevenson Lindor, Warren Wright, who are educators through iMarkets Live. They go from beginner to never seeing a chart before, no clue what a pip is, to intermediate, to even advanced. They'll show you everything you need to know. Then there's Christopher Terry, who is the CEO and has over 25 years of trading experience. So I would think he's pretty ideal to be following and paying attention to. Then there's Tracy Walker, who happens to be my sponsor and teaches in webinars as well as summits how to mark up your chart, how to see, how to find your entry price, your price that you need to get out of as well. Everything you need. And then the last area is swipe trades. And Swipe Trade, sorry, is an app that goes on your smartphone that you can actually get through iMarkets Live. So to have access to any of these, you need to be a part of iMarkets Live to be able to get the education, the skills, as well as the apps to do exactly this. Because once you learn this skill, once you follow directions, once you have this education, it will pay you for life. And I'm going to stop my screen share and see if there are any questions for me. And I answered a lot. Yes, I did. So we're going to let it go. And thank you very much for joining me on this Tuesday evening if you're in the East Coast or if you're in the United States. If you're not, have a fantastic remainder of your day, and I'll see everyone tomorrow. Now keep in mind that this weekend I won't be available to do training videos because I'm actually going to a business event which is titled Women Who Win Worldwide, and it's in Orlando. So I'm going to go have some fun, and I'll see everyone tomorrow. Bye for now.